Bitcoin at the gates of Bearadise. Got to watch these levels now, my friends. Hey guys, it's Keith Allen. Oh, I hope you are well positioned for, I'm not going to say, this is not going to be an I told you so video at all, because I'm not that guy. I'm hoping that you've been paying attention and that you're well positioned for this dump, because we've been talking about it for a solid 5 weeks. It is here. It's happening in the now. And we need to have eyes on where price is going to go from here. Hey, everybody, it's Keith Allen. Hope you had a, a decent weekend. It's been a holiday weekend here in the U.S. And so markets were closed on Monday. We're back in business here today on Tuesday. And obviously a ton of volatility since really the Sunday close that many people surprisingly to me, were caught off guard by. But if you are a faithful follower of this channel, then you were not caught off guard at all, were you? You were dialed in, you were well positioned and well prepared for what was coming, because I've been telling you for 5 weeks solid. Death cross is coming. It's imminent. And we have some history behind this move that's going to tell us exactly how things are likely to play out. And so far, they are. And so we're going to share with some folks who might be new to the stream, who might not be familiar with how we got here. We'll briefly talk about that, but I'm going to spend most of the time focused on where we're going, because let's face it, what happened has happened, and now we have to figure out how to position ourselves, how to strategize for what is coming if you haven't already done so. So that's what my goal is for the stream today. As per usual, live chat is open, so I hope you will engage with me here. It always makes the streams better, not just for me, because it's more fun for me, but it's also much better for you guys, because I'm going to answer your questions, at least to the best of my ability. And if you have insights, by all means, I want you to share them with me. So before we start, just do me the favor, a little bit of quick housekeeping. As per usual, smash some buttons for me. Help me grow this channel. I work hard for you guys. And, the algos don't always give me the automatic love. That love comes from your engagement. So please do me a favor, hit that like button, hit the share button, go ahead right now. I'm going to give you a few seconds to share this stream with one of your trading buddies, or better yet, with a group that you are engaged with, and invite those folks into the stream so we can grow this channel and we can all talk about this together. Okay. And then the last thing I'm going to remind you is to make sure you hit that subscribe button so you don't miss any of the future streams. I drop the free alpha on you guys on the regular. I don't want you to miss any of it, because we are, let's face it, in a pivotal time and a critical time of the market. So let's climb into charts. We're coming in head first at this point, right? So again, if you've been following the channel over the past 5 weeks, you were hopefully very well positioned for this move. We had lots of heads up. Were there some curveballs along the way? Yeah, a little bit, but in terms of this death cross, really, there were not. Death cross, you're saying. For those of you who may not be familiar, let's just climb right in and start sharing charts, and I'll show you exactly how we got here and exactly what I think we need to be watching to navigate the market that is in front of us right now. So let me go ahead and share a screen. Let's go with the candle chart for starters here. And I want to actually move to a weekly chart, because we have been talking about this death cross for a long, long time, and here it is. Now, I talk on the regular about the 21-day moving average. It's one that I have just over the years grown confidence in. A lot of folks use the 20 moving average, and that's fine too. There's no real right or wrong here. I just happened to be introduced to the 21 years and years ago when I first started trading crypto. And the premise behind that, the logic behind it, is that crypto trades on a 24/7 time frame, 24/7, 365, where traditional finance assets do not. And so 20 moving average is very common. and the 21 was really something kind of specific to crypto. Again, it's not critical. We're only talking about a week difference in these moving average timeframes. So really either one of your preference works. You can see this move a little bit more pronounced here when I use the 20 moving average versus the 21. So I'm showing that here. But for those of you who are faithfuls, I want to show you I have not abandoned the 21 moving average at all. It is still my go-to. I just, for illustration purposes, am showing you what the 20 looks like. It's just the 21 is just not as pronounced yet, but trust me, in another week it'll be there. It has crossed officially for whatever that's worth, right? So, so here's the deal here. We've got the death cross, right? What we were hoping for in the past weeks was that this golden cross would give us more of a boost than it did, and we would get up there and we would test that 50-week moving average. The 50-week, and I want you to remember this because this is a very important number, that 50-week is currently sitting around, let's see, 101,221, 101.2K. And so we've been looking for this resistance test literally since we lost this level, and it just hasn't happened. And so a little while ago, this is probably, I don't know, a week or two ago at this point, I put out an article and some other content around the fact that we had this narrow time frame between when the golden cross was happening on the daily chart and the death cross was happening on the weekly chart, and those two things together gave us really a tight window of opportunity for a quick move up and then down. Well, we didn't get the full move up. There was a lot of liquidity in the order book that blocked price from getting there. We even had some more coming in just ahead of that holiday weekend that you can see this block right here. This is a ladder of about 50 million in Bitcoin Ask liquidity up here. This showed up somewhere Friday afternoon, and this was I think this gave some folks some hope that this would be a magnet for some liquidity, but really what it was suppression. This was liquidity hurting at its best. You can see as soon as it came in, price started to get pushed down. And this was the Sunday close. This was the death cross right here. So we saw this big dump. And then, of course, lots of noise over the weekend, tariff threats going back and forth between the U.S. over Greenland and the EU over the American threat to Greenland. Okay, so not to turn this into a huge geopolitical discussion because I don't want to do that. But let me just say this. If you focus on the narratives, and I'm not just talking about that one. I mean, first headlines across the board, the tape this morning were that Saylor bought another gazillion dollars worth of Bitcoin, and that Tom Lee bought another gazillion dollars worth of ETH. And what happened to price? It fucking tanked. That's what happened. So the point here is, do not continue to follow these narratives. Do not continue to, if you're buying because Michael Saylor bought and you're buying because Tom Lee bought, you're on a direct path to get wrecked. Okay. If these narratives always paid off, then there would never be any deviation between price and the narrative. So do this for yourself. Okay. Don't do this for me. Do this for yourself. I want you for the next month to, and this is hard to do. This is something I've been disciplining myself to do. So I want you to do the same. I want you to ignore the narratives. I know it's hard. It's really, really hard. Ignore the narratives and just focus on the charts. Now, why do we do that? Let's use the DAT strategy as an example. Digital asset treasury. Michael Saylor obviously is the poster child for that, right? He's done it for Bitcoin. He has shepherded in many other companies to start their own Bitcoin treasuries. And then Tom Lee followed with an ETH treasury strategy of his own. Slightly different than Sailor's strategy, but nonetheless an ETH Treasury strategy. And you would think that, hey, with all of this institutional adoption, then price is going to go up, right? Sailor's buying, Tom Lee is buying, and all of their disciples are buying and buying and buying. Well, what's happening to price? It's going down. It's moving against those narratives right now. So let's tune out the narratives and let's focus on what's happening in the charts. And if you had done that any time over the last 5 weeks, you would have seen this death cross forming. You would have known what was happening. And when I say what's happening, I look at history. I don't speculate, I look at history. And history tells us something very, very simple, something very clear, and something very simple about this move. We have seen it time and time again. We've not seen it a lot, but we have seen it in each of the prior cycles. It's actually only happened once per cycle, I would say. There is actually a second instance where in 2020, and we saw a situation where we had the COVID crash, which gave it to us a second time during that cycle. But what I'm referring to here is, and I'm going to clear out some of these other things on the chart. What I'm referring to is this death cross specifically between the 21 or the 20, if you choose, and the 50-week moving averages. So I'm even going to turn off the other MAs for a moment, just so we can see what happens here. Okay, this cross is just happening, just began on Sunday at the Sunday close, so Sunday, Monday. But if we go back in history, we can see a very clear pattern of history, what happens with this specific death cross. Back in 2014, first time this happened. Let's just take a look. 2014, 72%. That's a bear market right there. That's a third confirmation for anybody wondering. Okay, so let's move on to the next cycle. Okay, in 2018, here it is again. We came off the 2019 top, the 2017 top, and let's see where it is. Let's see how it lines up. Here's your death cross, and here's a cool 63% to the downside. Let's look at it another time. Okay, here it happened again in the next cycle. Here's your death cross. And this one took us to that FTX crash, 65% to the downside. Okay, so there was a COVID crash in here somewhere. Here's another one, COVID crash. This one was a bit of an anomaly to me, but I'll give it to you just the same, just if you want to see what it looked like. This was 53% to the downside. And so to expect anything significantly different this time around, to me, it was naive. Okay, so doesn't mean it has to be 50% or 75% move, but certainly don't rule it out, right? So just know that there is a high probability that more downside is coming. Okay, that's number one. Now, where does it take us? What are the targets, and what are the invalidations that get us out of this mess? Those are all great questions. And so let's start by looking at a couple of things. One, I want to switch on some indicators that gave us a clue of what was happening. Even aside from what we saw in the charts, we also got an additional validation from trend precognition. Now, mind you, this is still a tentative signal. Doesn't print until the candle close, and this one in particular did not show up particularly early. That weighs on me a little bit, but the fact that there's confluence between both trend precognition algos gives this strength, in my opinion. And it's valid. It would be invalidated if price spiked up here above the 98K level, and then we're back in the hunt to go test resistance at that 50-week moving average, which I still believe needs to happen at some point. Now, it may not happen until we actually climb out of this bear market, but it needs to happen at some point. And I could see it happen. I could see a scenario where we test support, find local support, and then we go and test resistance here at that 50-week moving average. Now, where would that support test come from? Because you would have thought that we would have already hit it here, right? But no, price is continuing to bleed. We're now down 4.5% on the day. So where do you think price would land? Well, let me give you some clues here. First, let's open up turn on the other moving averages. And we do have a baseline of support here at the 100-week moving average, which is tested 1, 2, 3, 4, 5, 6 times already, right? And so it's reasonable to expect a test there. But you want to see something really interesting? This 100-day moving average is currently at around 87.3K. Let me show you what is also in that range. We have also in this range, we have the yearly open at 87.5K. And so this is my near range target for a support test. Now, there's a CME gap in here somewhere as well that I hear a lot of noise about. I'm not a huge gap trader, but for those of you in that cohort, we have a CME gap here as well, and you have that yearly open right around here at 87.5. So I see a scenario where this gap gets filled on the way down. So that's one thing. That's just a local support test. I think either way, these two tests need to happen. And in any order, they need to happen. But obviously, the path of least resistance right now is to go ahead and test this while we're down here. But this needs to happen. We need to have this support test at 87.5K, and we need to have a resistance test, and that's the yearly open timescape, by the way. And we need to have a resistance test at the 50-week moving average. Neither of those have occurred yet. We could range in here until it happens. We could range between 87 and 101 until that happens. But I think the more likely scenario is we go down and we test this level here. And if we come up short, then guess what? We're eventually still going to go down there. And we could find support right here and power way back up to that 50. There's still going to be a requirement, in my opinion, to come down and test this at some point. So until that happens, every rally is a fake out for me. Now, I have told you many, many times over the past 5 weeks that there were two things that I wanted to see to invalidate the bear market. One is a series of weekly closes above the 50-week moving average. And the other was the weekly RSI with weekly closes above that 41 range. Now, you'll notice that weekly RSI did poke up here over the past several days. But I have been warning you all along. It is not the wicks on the candles that count. It is not on a line chart. It is not a pop-up that matters. It's what happens at the weekly close. And on the weekly close this week, the RSI had already reverted and was already heading its way back down. So I said I wanted both of those conditions to be met before I was willing to consider an invalidation on the bear market. We obviously didn't have the support or the resistance test and the RS flip at the 50-week moving average. So we obviously didn't have that close. And so the fact that the RSI was peaking up did not excite me. And the fact that it reverted at the close or even prior to the close and started coming back down was more validation for me that rally was not going to survive or be sustainable. And so here we are now. I mean, this was up at one point. It was up 45 or 46 when price was really pumping, and now obviously it's rolled back down. So don't get faked out by moves like this. Don't be faked out by wicks. It is where these candle closes. It's where these candles close that matter. So you can see price continuing to erode right as we speak in real time. So if you doubt the things I'm telling you, that's fine, right? That's on you. But these warnings that I have been giving you, from the golden cross on the daily time frame to the death cross on the weekly time frame to how price would react between these timescape levels since that yearly open, have been dead on. Okay, the only deviation from exactly what I said was how long it took for this golden cross to actually form, because we had so much of a push and pull. We had crossed one day, uncrossed, crossed again. This was a little bit painful. We got this rally. I was hoping it was going to go all the way up to that 50-week moving average area around 101, and it just never happened because we had so much liquidity stacked above here, in this range, in this 98 to 100K range, that we just couldn't get up there. Bulls lost momentum. So as you can see now, there is some bid liquidity down here in this range, but I do not have confidence in it because of why? Because we know that we need to have a support test down at this level, at this specific level, 87.5K. And I just want to make sure I'm accurate. Okay, so the actual open was right there. Yeah, 87,496. So yes, 87.5K, good enough for me, or anywhere close to that, obviously. And this is slightly lower. This moving average is slightly lower than that. So either one of these could serve as support. Now, what I would like to see that I don't see yet is more bid liquidity stacked above that 87.5. I want to see a big fat concentration down here to give me some confidence that this is going to hold, and I'm not seeing it. So even this, right? So at 86, we have some liquidity, about 27 million. Hey, that's great, but I'd be a lot happier if it was 57 million or even 127 million. Then I'd be like, okay, we got a shot to move up. But as we saw here earlier this morning, there was 50 million stacked here at 90.5K, and that was eaten rather hastily. So there's no level of liquidity that is impenetrable when the market wants to do it. Okay, so be mindful of that, and know that these technical things need to happen regardless of what is happening with the narratives. And Trump is going to go back and forth with the EU for an undisclosed amount of time, and if new tariffs are enacted from either side, it's going to take some time for those to filter through the economy. They're not going to filter through in a positive way. So know that, and again, in terms of narratives, you hear that, the Fed is going to inject, billions of dollars. Hey, great. They're injecting billions of dollars on rising unemployment and a ludicrous tariff war, that, God forbid, could escalate into a global or a world war. Right? Sure, it's going to start with tariffs, but God help us if it turns to bullets. But it could indeed happen. So that's what the markets are preparing for. And so even though people will say, well, this all happened because of this tariff war, I don't buy into that. And the reason I don't buy into that is because I've been forecasting this exact move for 5 weeks, long before this started volleying back and forth between the EU and Trump and Greenland and all this bullshit. So does that fuel the fire? Absolutely. So that's just helping the cascade, right? But just know that these technical things need to happen, and some clues are going to come from where we see the liquidity moving in the order book. That's one of them. And two, what's happening with the order flow. And you don't see any real buying happening here right now. In fact, you see mostly selling. You see the smallest order classes coming back in. Sure, it could be whales T-whopping, but there's no real volume here just yet. So until that happens, until we see volume on the CVD, on the bin CVD, especially volume coming from the larger order classes, being brown and purple whales, and until we see more bid liquidity stacked, I mean heavy concentrations stacked near the buy zone, then at least near price, then price is likely going to continue to erode, at least until we get down to what key levels? What key levels? Say it with me. Those timescape levels. Okay. So, in terms of where we could go in the long run, I think I have another chart open here. Hang on a second. So, let's talk about some long range targets. And there's a bit of speculation here. You guys know, if you followed me for any length of time, you know I don't like to speculate. So I'm not. Gosh, have I left this thing? Hey, Bryce. I think I've left this up for a long time. Live chat is open, by the way, guys, if nobody else is paying attention. So a little bit of speculation here, but as you guys know, I don't really like to speculate, but I obviously have to identify some potential targets. Nobody knows where we ultimately are going to land, and a lot has to do with the timing of this, right? And these geopolitical things, these narratives may, like I said, add fuel to the fire. But let's face it, Bitcoin's kind of heading in this direction either way. And it comes down to what's the pacing. So, for example, if we saw a quick bounce right here, a quick bounce up to the 50-week moving average, I wouldn't have a great deal of confidence that it is sustainable. What I want to see is that real support test down here around the yearly open and that 100-week moving average, and then an RS flip here, and then an RS flip here, a support test, and then up. Short of seeing that, well, any of these targets are potential targets, in my opinion, but the most likely ones. Obviously, we have a lower low here at this 74.5 range. A lot of people are in tune to this level. A lot of people are expecting price to go there. I think it could be a place for a temporary bounce. Sure, it could be a great place to find bottom. It would be a fantastic bottom support. And there's plenty of cases where double bottoms, like if we saw that would form a double bottom. And there's plenty of cases in history where death crosses between those key moving averages, whether it's the 20 and the 50 or the 100 and the 200. There's plenty of examples where double bottoms are indeed establishing the macro bottom. And I'm not going to show you all those now. You can scroll back through history, and I've shown those on a bunch of other videos. So that is indeed a potential target. It would take a great catalyst, in my opinion, to establish that as the bottom, and we climb out from there. From this range, I have a lot of attention on that 69K level because it was the 2021 top. Not just because it was the 21 top, but not just because we spent so much time consolidating there, but for a symbolic move against the current administration that really was the catalyst for breaking above that level after 8 months of consolidation. On election day, we broke that level. So this would be a complete round trip from election day. Beyond that 69K level, we have to start looking at other targets. The 200 week moving average is one that until that 2022 bear market hadn't really been breached. This was COVID. This was an anomaly. This was a very quick wick and done. Um, but this level, this 200-week moving average, has served as macro support for a long, long time in Bitcoin's history. Um, doesn't mean it has to hold that, and of course, this is a moving average, so it also doesn't mean it's going to stay here, right? Over time, how long does it take for us to, if we break through this 2021 top, how long does it take for us to get there? Okay. And where is this moving average by then? By then, this moving average might be at the 2021 top, and then I would really have more confidence in it. Right now, it's kind of floating here in a bit of a range zone. So I also like these prior consolidation levels. I like this range here, this basically 49 to low 50s range, and in an extreme set of circumstances, we would go back to the beginning of the consolidation that for me was what kicked off the bull market. And that gets us in that really 25 to 30K range. That seems very extreme at this point for me. What I like about this level here and this 50K range is we go to another lower low, but we don't break it necessarily. Don't really want to see us create another lower low. And if you look at the history of these cycles, um, it's rare for that to happen, right? So even here, and I don't have the cycles up. Let's go to this one that shows the cycles. Um, let's go like so and clear out some of the noise. Turn off trend. And this would be good because we can also see timescape levels here. And that's going to show us. Okay, well, actually, I want to clean that up first. So what I was saying is we don't, these macro lows typically don't, at least historically, have not gone lower than the prior low in the macro structure, right? So this held here before it came down to this, 85 level. We're talking, 2013. Can you imagine 2013 levels? Um, and same set of circumstances here. We didn't break all the way down here, and we didn't break down below this here. And so one of these has to hold. And in my opinion, this would be fantastic. We've already double bottomed here once on the daily time frame. It would be good to see that happen here on a higher time frame, and we bounce from there. So this is a legit reasonable target. And if that one fails, this is my next target in that low 50s range, 49 to low 50s range. And so now I want to show you on this other chart. Um, I want to show you on this other chart where there might be some strength in that around these timescape levels, because where there's a concentration of timescapes, there's more strength, and where timescapes have confluence with other technical indicators, there's more strength. So as you can see, at the moment, there's confluence with the 200-week moving average around this Q2 2021 timescape level. And there's even more down here around this 50K range where we have this cluster of timescape levels down here. So these are my immediate targets. Let's see, Pony Teeth. What you asking here, Pony Teeth? Would you lose confidence in Bitcoin if we went really low or see it as a buying opportunity? Oh, 100% buying opportunity. I'm banking on it. As a matter of fact, in full disclosure, I have sold a significant amount of my Bitcoin, of my long-term Bitcoin position, even because I want to stack more Sats. And so I've to date sold everything that I purchased over 60K. And so that means I have a lot. It doesn't mean that I have a ton of conviction that we're going down to this 50K range. But gives me, well, number one, I didn't want to give it all back. I had given enough back. I didn't want to give it all back. I wanted to take some profit. And that was a long-term position I had been building since 2022, since the FTX crash. Um, so I had some long-term capital gains on it rather than short-term. So that was okay. Um, but I want to rebuild that position, but I want more Bitcoin. So I will be DCAing my way in at these key levels, whether we end up holding at that 74K range or not. I'll be buying a little bit there, and I'll be buying literally all the way down at those key spots. So those are the things I have in mind. Those are the things that's how I'm playing it. That certainly doesn't mean that you should do the same thing. That's my strategy, not yours. Okay. So yes, I don't, in terms of confidence, I don't think Bitcoin is dead by any stretch of the imagination. I think Bitcoin is here to stay. I think that it is only going to have more institutional adoption. I just think it's going to start trading more like an institutional asset, more like a traditional asset than it has than trade like the highly speculative asset that it's been over the past decade or so. And so I want to buy more, but I want to buy more when it gets cheaper. So that's my position on that. Hope that gives you some insight. Hope this collectively gives you something to think about and helps you prepare for what lies ahead. I'm telling you, these death crosses are no joke, and it does not mean we're going to get one nasty dip and that's it. These historically have been long term, 5 months or more until we find a bottom. Doesn't mean it has to happen the same way this time, but don't take my word for it. Do yourself the favor of looking it up historically, look through time and see what these death crosses between the 21 or the 20-week moving average and the 50-week moving average have historically done. And you will be, I think you'll be much more prepared to deal with what's ahead. And for that matter, don't take anybody's word for what you're hearing online and certainly on social media platforms. Verify, don't trust. That includes everything that I tell you. If somebody's just throwing out random numbers or telling you the biggest bull market in history is about to begin, it's bullshit. Absolute bullshit. Look for data. Look at the charts. The charts don't lie. Hope that helps you trade smarter, my friends. We'll be back doing more this week. In the meantime, if you want to engage with me more, join our global community on Telegram. You'll find links in the profile in the description below and on the profile page of the X channel, of the YouTube channel, of the Material Indicators not Facebook page, the Material Indicators web page, and on the CoinMarketCap page. And of course, you can also find me on my personal channel on X at KA Productions. Yeah, that's a wrap. If you haven't done so yet, make sure you hit that subscribe so you never, ever, ever miss a future stream. I drop the alpha on the regular. Make it a great day.